Hello everyone and welcome back to RBR's Self-Service Banking Asia 2020. My name is Emily Beebe. I'm a Senior Research Analyst at RBR and I am joined today by Mark Aldred from Auriga. Mark joined Auriga in 2015 as Head of Sales and has over 30 years experience in the sector, focusing on electronic delivery of financial services during that time. And today Mark is going to focus on empowering the next-gen bank through technology. So over to you, Mark.
Thank you, Emily. As you say, I'm Mark Aldred. I'm with Auriga and we're delighted to be here at Self-Service Banking Asia 2020. We're going to talk about three things. Legacy infrastructure today that drives most of the self-service estates around the world is no longer fit for the challenges of the 2020s. Self-service can be the formation, the basis of the branch of the future, but it can be delivered now. And whatever you do, it must be secure. So we're going to talk about those three topics. Auriga in a nutshell, well, we're based in Europe. We're 370 people. We serve 150 of our own customers, but they in turn serve 300 others. We can only stay competitive and grow through innovation, and we invest very heavily in that. In Italy, where we have more than 70% market share, we support more than 40,000 devices, and last year handled more than €1 billion in traffic. So that's who we are and why we're opinionated on this subject. Self-service banking should, of course, be an integral part of any future channel strategy and should be seen as a vehicle for growth rather than a cost burden. Banks worldwide are deploying in-branch technologies to accommodate clients' changing behaviours and expectations and to deliver services efficiently. They're exploiting their branch estate and ATMs to change the way they engage with their customers. And once a bank has a joined-up channel strategy, the data that can be gathered is of great use for great management and business decisions. I want to talk a little bit about the history of the ATM. When ATMs were first widely deployed and seen as an innovative new digital channel, the hardware vendors set the standards. 40 years ago or so, NDC was born to help bridge the gap between the ATM hardware and software and the switch which drove it. And this is the model that you see here. The requirement of the switch that it was near 100% available and provided authorization of funds, while the requirement of the NDC interface was that it allowed people to get access to cash. That was basically it. And that model served well. At the turn of the millennium, a standard was agreed, and we're all familiar with it, XFS. The objective was to open the markets, to provide choice, to reduce costs, to create competition. And multi-vendor software should allow all of that. In fact, the fact that the top two hardware vendors are also today still the top two multi-vendor software vendors means perhaps that this hasn't achieved its objectives. Maybe the world wasn't ready, but certainly multi-vendor software hasn't yet achieved all of its objectives. There's a new model emerging, and it's already delivering massive benefits to deployers in Europe and elsewhere. It removes dependencies on the switch. It allows innovation to be accelerated and achieved at lower cost and at lower risk. By removing the NDC protocol altogether, true channel integration can be delivered quickly, and costs will be reduced and additional services can be delivered, and the self-service channel can be modernized. If the system is truly integrated and delivered from one source, the costs of management of the self-service estate can be massively reduced, and income from the channel can be increased. Of course, the hardware vendors are jumping on this bandwagon, but they're starting from the wrong place and will take years to deliver anything like this. So we can't wait, and the world can't wait for them. If you do deploy channel-centric model that I've just spoken about, as many have already, then banks can think differently about themselves, their branch networks and their self-service channels. A different approach to branches is not only possible, but it's one of the only ways for legacy banks to protect and grow their businesses. And the truth is, if you don't adopt, then somebody else will step into your space. What's required now, more than ever, is customer-centric, secure, and accessible banking. Technology that brings customers closer to their providers, that is always on and it's everywhere, and that's for every customer all about me. We've learned from systems outages that technology supporting online and mobile banking can fail and can create inconvenience, distress, and reputational damage. Equally, we now know that in times of need like these, Remote secure access to banking services is vital, and its availability is non-negotiable. So what does a bank do, and what does a bank look like when it's able to accommodate digital natives who are happy to engage solely through their smartphone, as well as those who prefer an in-person physical space contact with their bank? What does that bank look like when it doesn't only rely on one channel, but on all channels? It'll look different to today's legacy banks, that's for sure, but it'll be much more than a one-product neobank or one-product fintech. 24-hour banking supported by remote video assistance. While optionally in daytime, branch can be manned with staff who focus on customer care. The new branch can be compact because technology enables it. It'll be lower cost and generate more income than any existing model. It can be rapidly deployed and sited wherever the demand is. And of course, it can be shared so that clients of multiple banks can be served equally well in the same space. These new branches are secure, safe and private spaces where every aspect of a bank service can be delivered to its own customers and others. New branches are the future, but deliverable now because the hardware and software required already exist, and because we don't need to use legacy infrastructure anymore. They're proven in the worldwide delivery of services through ATMs and other self-service channels. How best can these new branches be deployed? Well, the good news is that if the technology choices are the right ones, then they can be rolled out very rapidly. Where traditional branches no longer justify themselves, deploy a lean branch as a cost-effective alternative. At the same time, you'll see greater efficiency and improved results. Extending the service office offering and business hours can only lead to greater profitability. Supporting communities, the environment, and of course your own customers could lead to levels of loyalty from another age and a reputational boost to your businesses. And of course, where the high street is not the right place to site a lean branch, it can be wherever the demand is. That might previously have been thought to be in a shopping mall, but in these unusual times, even that model is challenged, more so perhaps than the high street. So its place in the future mix is by no means certain. Having this kind of deployment model means that banks can keep their branch strategy under constant review and adapt it in near real time. So then, of course, it has to be secure. As we've already discussed, banks provide essential services that need to be available 24/7, 365 days a year, and keeping them secure is paramount. Cyber attacks on critical devices are highly targeted and designed to spot any embedded vulnerabilities. And in the current legacy, we believe that there are such vulnerabilities. The new branch model sees a combination of information technology and operational technology. They're two different things, and they need different approaches to help keeping them secure. Today, we use generalist tools to do a specialist job. And like all of the other components of the infrastructure that I spoke about, they need to be swapped out for specialist comprehensive security solutions, which are also available today. By putting an effective operational technology cybersecurity strategy in place, based on the right set of protection technologies, it's possible to secure critical devices and therefore the new branch without impacting operations and while complying with regulations. Given that financial services providers are a constant target for criminals, they need to maximize efforts to keep up with this dynamic threat. They need to avoid breaches of large databases, leaving hundreds of thousands of people's data at risk. In considering a cloud deployment with all its advantages, it's important that the cloud services must also comply with cybersecurity standards that guarantee the integrity of the data. And cloud is the direction that we're all headed, and therefore this is vital that we take this into account. So in summary, we're being constrained by the past, and our usual behaviours and our usual approaches are part of the problem. Banks who are closing branches in volume and removing self-service access to cash are handing over control to their competitors, to new entrants and others. But they're also missing the point that these assets have real relevance now and in future and could be part of the solution, not part of the problem. And of course, security is the foundation of everything and a vulnerability that threatens us all. So thank you for your time. Please visit Auriga's booth. If you'd like to hear from us at our booth, how we're delivering this vision to our clients on 3 continents. Thank you very much, and thank you, Emily.
Thanks, Mark. That was a really interesting presentation. It almost seems like science fiction, doesn't it, this idea of a lean branch, but as you say, it's only just a couple of steps away, isn't it, for the banks of today? So really good stuff. Thank you. I have a couple of questions, if you don't mind.
Sure, of course.
My first one sort of leads on from that point, really. This idea of a lean branch sounds better and more productive and cost effective than a traditional branch. But how realistic is it, and how long do we have to wait for the technology to support this?
Well, we don't have to wait. The technology's here. So we're at SelfService Banking Asia talking about self-service devices, which are often seen as an independent channel, a silo in a bank's digital channel strategy. But those same technologies and their near neighbours, when put on the right software platform, can already deliver all of this. And we have clients in Europe and elsewhere who are already deploying these new models of branches where 24/7 service can increase revenue potential, can increase wallet share, and can increase profitability. So the model exists, it's deliverable, we don't have to wait. We have the opportunity to define it in any way that suits us because there's such a range of hardware choices available, and hardware is partly at the centre of this, but only when built on the right independent multi-vendor software platform that can be easily deployed across all of the hardware types.
Mm-hmm. I suppose my next question is sort of flips that round on its head then. What are the main obstacles for adoption of this new kind of branch format, and how can banks overcome them?
Well, I think there's the business related issue and there's a technology issue. Banks are seldom organised to make decisions across all of their channels. It's too often the case that the bank thinks in silos because that's the way they've had to act in the past. I started by talking about the legacy infrastructure no longer being fit for purpose, and that's the real encumbrance, that's the real limitation. So if we stop thinking about ATMs as cash out devices, as self-service devices, as being a cash source, and that's all, if we start to make demands of our technology to integrate different channels so that the customer journey can be the one that they choose, starting on a transaction on one channel and perhaps ending it in branch or elsewhere on another channel. If we adopt the right technologies, as our customers have been able to do, then that obstacle is overcome. Structurally, banks need to think not of as self-service as being a siloed channel, but it's part of the digital strategy. And once banks think that way and the technology enables it, then all of this is possible, and there'll be no more obstacles.
Mm-hmm. Mm-hmm. Yeah, that's a good point. My next question is, you say that the existing infrastructure is not the best starting point for innovation, but it's also difficult and expensive for banks to change. So how can deployers modernize without having to change everything?
It's the old conundrum, isn't it? And everybody's looking at infrastructure and making the claim that infrastructure is not fit for purpose. But the whole of the infrastructure does not need to change in order to start to see the benefits. So the NDC protocol is 40 years old. Many of the switches that sit behind them and manage the devices are 50 years old, some less, some of that age. If you seek to change that whole infrastructure, you'll be undertaking a massive long-term project which carries risk, cost, and you're meddling with the mission-critical heart of the bank. So much better to concentrate on the parts that you can change rapidly in order to gain customer advantage. And our solution, which is one option, sits in front of the switch and takes control of devices from the switch, so that instead of relying on the monolith that manages all of the transactions or all the point of sale or ATM transactions of the bank, we front end that. We dispense with NDC, which means we can manage traffic efficiently, which is cash and non-cash, goes out to third parties, linked through interfaces and interchanges to other services. So starting small and growing backwards is one way. Obviously, our solution can be deployed on premises, in the cloud, or as a managed service. And I spoke about 300 customers who are receiving it as a managed service, and others use our solution in the cloud. So those that are migrating into the cloud can make choices about the speed with which they do it. Those that are migrating their switch can do so at their own pace. And this decision to modernize the front end need not be associated with either of those fundamental strategic judgments and long 5, 10, 20-year commitments. So you can start to do this really rapidly by simply taking the terminals off the switch, dispensing with NDC, and deploying whatever technology and whatever software is suitable to deliver the customer service that's appropriate for you.
Mm. So it doesn't need to be as difficult as maybe it might seem from the outset.
Not at all. Our clients have started the journey, and in many cases are in a very advanced state on this journey. As I said, we've deployed lean branches already. Our clients enjoy omnichannel experiences, the digital and mobile and internet channels all integrated with ATM, the same services available across all of them. The customer experience is shared one, the service is shared. So the journey can start now, and real advantage can be gained. And obviously the underlying infrastructure, the scaffolding, if you like, of the bank can be addressed when it's right and in the way that is right for each bank. But to get started at the front end, there need be no obstacles today.
That's very interesting, and I'm also interested to know, of the customers that have already started rolling out this lean branch format. Do those banks find that this branch format is applicable, to replace all of the traditional format branches, or will it just be some? And how are they strategizing that as a part of their overall branch strategy?
That's going to vary from region to region, country to country, bank to bank. Our clients are, like everybody else, closing branches. So let's make no mistake, this is about reducing the cost of the branch infrastructure. But in closing branches, they've come to determine that actually it's not that there are too many necessarily, but that some of them are in the wrong place. So this branch format means that you can rationalise the placing of branches. So we had a client, for example, in the Iberian Peninsula who's implementing a new standard of branch and also closing traditional branches. The new branches are cheaper to run, they're smaller footprint, they are 50% more productive, and they offer all of the services and more that a teller can offer, and they're unmanned during the night when they're still operating fully. So for that bank, it was about closing traditional branches, implementing a new model and rolling out this new model, and then a mix of the two, whereas the lean branch can be at the back of a traditional legacy branch. It can be a part of an infrastructure. The lean branch is a way of re-engaging with communities that have lost banking services, where the judgment was that a traditional legacy bank branch couldn't pay for itself. And when the branch goes, so does the self-service, because it's commonly through the wall or in the lobby. So for a community to lose all of that because there wasn't enough footfall, it's not good for the community. And those people who rely on banking services will be looking for new services from new suppliers, or they will be unbanked. And I guess few of us want that. So a lean branch is an opportunity to make a different decision. Not should we close the branch, but should we change its location? Should we rationalise it? Should we slim it down? Should we open it 24 hours? Would that increase the footfall sufficiently? And certainly it's the case with our clients that there is a lot more business engaged in 24-hour branches than they expected, to be frank.
That's fascinating stuff. It's really interesting to see how technology can empower this new type of branch and keep the branch relevant, for tomorrow's customers as well. So thank you very much.
It's all based, Emily, on self-service, which I guess is the theme of the conference. It's about that kind of technology creating a new use for itself, a new relevance for itself, and it's very relevant in this context.
Yeah. Well, thank you so much again for sharing your thoughts at this virtual conference. I'm sure that our attendees will have plenty of questions for you and for the Auriga team. So if you do, please don't hesitate to visit the booth in the exhibition hall. And thank you very much to Mark and Auriga once again. Thank you.